Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Oklo.
If you find our talks useful, please consider subscribe, like, and comment underneath, because today we are tackling a really fascinating intersection. You know, usually when we talk about the artificial intelligence boom, we're picturing racks of super advanced chips.
Right. We think about the brains of the operation.
Exactly, the brains. But we rarely stop to think about the stomach, the sheer ungodly amount of electricity required to keep those digital brains thinking.
And that hunger is exactly what we need to focus on today. We are looking at a company trying to solve AI's biggest bottleneck. And it is not a chip manufacturer.
No, it's a nuclear energy company.
Right. Oklo.
And before you picture, glowing green rods bouncing down the street, forget all of that. This is something completely different.
It really is.
Yeah.
And our mission for today's analysis is pretty clear. We need to figure out if Oklo is actually the future of clean energy for big tech, or if it's just a really expensive science project that's going to, well, burn through investor cash before it ever powers a server.
That is the billion-dollar question. So let's start with the hook. Why is a nuclear company being mentioned in the same breath as the AI boom? I mean, usually utilities are the boring part of the stock market.
They absolutely are. But Oklo isn't pitching itself as a traditional utility. They are pitching themselves as critical infrastructure for AI. Here's the context you have to understand. Data centers are scaling up exponentially right now.
Right. The power demands are just off the charts.
Exactly. A few years ago, a data center might need, say, 10 or 20 megawatts of power. Now, with the training clusters for these massive language models, we are talking about facilities that need hundreds of megawatts, potentially gigawatts.
And the current grid just can't handle that.
The current grid is congested. It's old, and frankly, it takes way too long to upgrade. If you are Google or Microsoft, you can't wait 7 years for the local utility to build new transmission lines.
You need the power yesterday.
You need it now, and you need it clean to hit your ESG targets. That is where Oklo slides in. Their flagship product, the Aurora, isn't a massive, sprawling power plant. It's a powerhouse in a small box.
Right, the Aurora. I've seen the mock-ups of this thing. It looks more like an A-frame ski lodge than a nuclear reactor.
It really does.
But let's get technical for a second. The phrase that keeps coming up is liquid metal fast reactor. That sounds incredibly cool, but what does it actually mean? How is this different from the nuclear plants we have today?
This is crucial to understand, because it is not just marketing jargon. It is a fundamental shift in physics. Okay, imagine a swimming pool. Traditional reactors, the ones we've used for decades, are light water reactors.
Okay.
They use water to slow down the neutrons splitting off the uranium atoms. They have to slow them down or moderate them to sustain the reaction.
So traditional nuclear is sort of like running underwater. Everything just moves slower.
That's a great way to put it, exactly. But Oklo's Aurora is a fast reactor. It doesn't use water. It uses liquid metal to cool the core.
And liquid metal doesn't slow things down.
Right. It lets the neutrons stay fast. And here's why that matters. Fast neutrons are like high-speed bowling balls. They hit much harder. They can split heavy, stubborn isotopes that slow, water-moderated neutrons just bounce right off of.
And those heavy, stubborn isotopes, that's nuclear waste, right?
Precisely. This is the magic trick of the whole operation. Because they use fast neutrons, the Aurora can actually use recycled nuclear waste as fuel. It consumes the transuranics, the really nasty, long-lived radioactive garbage, and turns it into heat.
So they are taking the industry's biggest headache, the waste stockpile, and turning it into a primary fuel source.
Correct. And because it is so incredibly efficient at using this fuel, these reactors can run for 10 years without refueling.
Wait, 10 years?
10 years. Compare that to a standard plant that has to shut down every 18 months to shuffle fuel rods around.
That's a massive difference.
It is. If you are running a data center that needs 99.99% uptime, you do not want downtime. You want a battery that lasts a decade. That is the pitch.
Okay, that sounds incredible on paper, but I want to poke at the business side of this because the tech is only half the story. Usually, when a company builds a machine, whether it's a wind turbine or a gas generator, they sell the machine.
Right.
They say, here's your reactor, that'll be $100 million, thanks very much. But Oklo isn't doing that, are they?
No, they aren't. And this is where the valuation model gets really interesting. Oklo is an owner-operator. They are not selling the Aurora powerhouse. They are installing it, owning it, operating it, and selling the electrons It produces via a power purchase agreement.
Or a PPA. So they're basically a utility.
Functionally, yes. They are a
Okay.
distributed utility.
But wait a minute. If I'm an investor, doesn't that massively increase the risk? Well, if I sell you a machine, I get the cash up front and I walk away. Clean break. If I own the machine, I have to pay to build it, I have to maintain it, and I only get paid back slowly over 20 years. Why would they choose the harder path?
Two main reasons. First, recurring revenue. Wall Street pays a much higher multiple for steady, predictable cash flow that lasts for decades than they do for lumpy one-time sales.
It's the difference between buying a DVD and subscribing to Netflix.
Exactly. Everyone wants to be a subscription business. But the second reason is control. Nuclear is hard. If you sell a reactor to a data center operator, that data center operator now has to become a nuclear operator.
Which Amazon definitely does not want to do.
Right. They would have to hire nuclear physicists, deal with the NRC, handle heavy security. Amazon just wants the plug in the wall to work. By Oklo saying, we will handle the nukes, you just pay for the power they were all on. They completely remove the friction for the customer.
That makes total sense. It's nuclear as a service.
Exactly.
But here's where we have to crash the party with some cold, hard reality. You mentioned Wall Street loves recurring revenue, but looking at Oklo's financials today, there is no revenue. None. Zero.
That is the radioactive elephant in the room. Oklo is strictly pre-revenue right now. They are burning cash, not generating it.
Let's look at the numbers. They merged via a SPAC back in May of 2024, and they walked away with about $306 million, which sounds like a decent war chest.
It is, until you look at the burn rate. Management is guiding for an operating cash outflow of roughly $65 million to $80 million a year.
Okay, doing a napkin math here. 300 million divided by roughly 75 million, that gives them about 4 years.
Maybe a little less if costs ramp up as they actually start building.
Right. And the timeline to meaningful revenue, actual cash coming from the grid, isn't expected until late 2027 or early 2028.
So it is a very tightrope walk. They have virtually zero margin for error. Now, they do have this subsidiary called Atomic Alchemy.
Which, by the way, sounds like a shop where you'd buy magic crystals, not nuclear isotopes.
It does have a certain flair to it, but Atomic Alchemy is actually a very clever strategic move. It's a subsidiary focused on producing radioisotopes for medical and industrial use. They have partnered with the Department of Energy for a pilot facility.
Is that going to save the balance sheet?
No.
Yeah.
Absolutely not. It might bring in a trickle of incremental revenue starting in early 2026, but we are talking pocket change compared to the cost of building actual reactors.
So why do it?
Because it is not just about the money, it is about the muscle memory.
What do you mean by muscle memory?
It proves to the regulators and the investors that Oklo can actually execute. They can handle nuclear materials, they can manage a complex supply chain, they can navigate the heavy paperwork. It is essentially a warm-up lap before the main event.
Okay, so it's a credibility play. But let's talk about that main event timeline. 2027. That is 3 years away. In the stock market, 3 years is an absolute eternity.
It really is.
We have seen the stock price bouncing around like crazy recently, seeing sharp plunges followed by massive rallies. What is driving that volatility if there is no news on earnings?
It is fear and greed, pure and simple. Oklo has become a bit of a battleground stock. On one side, you have the smart money. We have seen highly unusual activity in the options market, huge volume bets that suggest institutional players are positioning for a major move.
And positioning usually means they either know something we don't or they are betting on a sector-wide shift.
It's likely the sector. You have to remember, Oklo does not trade in a vacuum. It is heavily tethered to the broader nuclear and uranium markets.
Right, like the recent news about the U.S. potentially building a $12 billion critical minerals and uranium stockpile.
Exactly. When a macro event like that happens, or when geopolitical tensions flare up, say U.S. and Iran talks, it causes massive swings. The whole energy sector lifts, and Oklo gets dragged up with the tide.
Even though they don't actually own any uranium mines or produce any power yet.
Exactly. It is trading entirely on sentiment right now, although it's worth noting that the quantitative sentiment score is technically neutral right now, despite all the buzz. But that buzz is being fueled by some very big names. We cannot ignore the Sam Altman factor.
Yeah, let's definitely touch on that. Sam Altman, the face of OpenAI, was an early CEO of Oklo and is still the chairman.
And that connection is way more than just a celebrity endorsement. It reinforces the very thesis we started with: AI needs power. Altman knows better than anyone exactly how much juice OpenAI is going to need in 2030.
So him being heavily invested in Oklo is effectively him hedging his own energy risk.
It's vertical integration. He is building the brain, and he is investing in the stomach to feed it,
Plus, you have heavy hitters like Peter Thiel and Dustin Moskovitz backing it.
which implies patient capital. These are not day traders looking for a quick flip. These are people who are completely willing to wait a decade for a 100x return.
But even Sam Altman and Peter Thiel cannot overrule the federal government. And this brings us to what I think is the single biggest risk factor in this entire analysis: the Nuclear Regulatory Commission, the NRC,
The final boss.
the final boss. Because you can have the best tech, the coolest liquid metal fast reactor, and all the billions of dollars from Silicon Valley. But if the NRC does not stamp the paper, you do not build anything.
That is correct. And the NRC is notoriously slow, conservative, and incredibly risk-averse. They are used to regulating massive, traditional light water reactors, not these tiny liquid metal novelties.
So where does Oklo actually stand with them? Didn't they have a permit denied a few years ago?
They did. Back in 2022, the NRC denied their application, essentially because it just didn't have enough data. It was a major setback. However, Oklo didn't pack up and go home. They retooled. They are currently engaging with the NRC on a brand new pathway.
Okay.
But here is the real moat part of the argument. Despite that denial, Oklo is still further ahead than almost anyone else in this specific space.
How so? If they got denied, how are they ahead?
Because they have a site use permit from the Department of Energy for location in Idaho. That dates all the way back to 2019. They have secured fuel awards, they've gone through the ringer, and learned exactly what the NRC wants.
Oh, I see.
If a competitor started today, they would be 5 years behind Oklo, just on the paperwork alone.
So the bureaucracy itself is the moat. It is so hard to get through that if you're at the front of the line, you have a massive advantage.
Yes, but that brings us right back to the cash burn rate. This is the race. The race isn't really against a competitor. It is against their own bank account. If the NRC approval slips from 2027 to 2028, that's doable.
But if it slips to 2029 or 2030...
They run out of cash, and then they have to do a capital raise.
Yeah.
And if you are raising money because you were delayed and desperate, Wall Street will eat you alive.
They will dilute the existing shareholders into oblivion.
Exactly. That is the ultimate bear case scenario. It's not that the technology won't work. It's that the paperwork takes longer than the money lasts.
That is a terrifying thought for an investor. You could be totally right about the tech and still lose all your money just because of a bureaucratic delay. So, given that intense risk, what are the analysts saying? We are seeing some wildly conflicting ratings out there.
Conflicting is putting it mildly. It is a highly polarized stock. On one side, you have the automated quantitative ratings, like the Zacks rank number 4, which is a clear sell.
Why is it a sell for them?
Because those algorithms primarily look at near-term earnings revisions. Oklo has no earnings. So the algorithm looks at it and says, this company loses money and has no sales. Sell. It is strictly looking at the present.
And what about the human analysts?
The humans, like the team at Texas Capital Securities, are looking at the future. They recently initiated a buy rating with a massive price target of $138.
$138. It is trading way, way below that right now.
Right, because that target implies they believe the tech works, the NRC approves it on time, and Oklo successfully scales into a utility giant. It's a binary bet. It is either going to zero or it is going to the moon. There is almost no middle ground here.
So if you are listening to this and thinking, okay, I want a piece of the nuclear AI future, what are you actually watching for? Because you obviously can't watch for an earnings beat.
No. Ignore the quarterly earnings calls entirely. They're basically irrelevant right now. You need to watch the calendar for regulatory milestones. You are watching for shovels in the ground.
Literally.
Literally. Watch for site excavation to begin at their Pluto test reactor site. Watch for the Department of Energy agreements. Watch for the NRC releasing draft safety evaluations.
So it's a checklist.
Exactly.
Yeah.
These are the milestones that matter. Every single time they pass a regulatory hurdle, the existential risk goes down, and the stock should theoretically go up.
It sounds like we are watching a construction project in slow motion where the foundation is made entirely out of paperwork.
That is a perfect description of the nuclear industry.
So let's wrap this up with the overall thesis. You have looked at the tech, the financial reality, the backers, and the immense risks. Where do you land on this?
If I had to score it, I would give it a bullish 7 out of 10, but with a massive bolded asterisk.
What's the asterisk?
The asterisk is patience. The core investment thesis is incredibly sound. The world desperately needs clean baseload power for AI. Solar and wind cannot do it alone because the sun doesn't always shine and the wind doesn't always blow.
You need that constant uptime.
Right. Nuclear is the clear answer, and Oklo arguably has the best product-market fit specifically tailored for data centers. But you have to be willing to hold through 50% drops. You have to be willing to watch the stock do absolutely nothing for 2 years while lawyers argue with federal regulators over cooling specifications. This is a multi-year hold.
So if you buy this thinking it is going to pop next week just because NVIDIA had a good quarter, you are in the wrong stock.
Completely the wrong stock. You are buying a ticket for a ride that does not really start until 2027.
I think that is a great way to frame it. It's not a trade. It's a venture capital bet that you can buy on the public market. But before we sign off, I want to go back to something you hinted at earlier regarding the valuation. We talked about how they are functionally a utility, but they are priced and backed like a tech startup. Leave us with a final thought on that dynamic.
Here's the question I want you to mull over. In 10 years, if Oklo is fully successful, how does the broader market actually value it? Traditional utilities like a Duke Energy or a Southern Company usually trade at maybe 15 to 20 times their earnings. They are considered boring, safe, yield plays.
Right, slow and steady.
But tech growth stocks often trade at 30, 40, sometimes 50 times earnings. Oklo is sitting right in the middle of an identity crisis.
How so?
They are selling electrons, which makes them a utility. But they are exclusively powering the most advanced technological revolution in human history, which makes them tech. If the market decides Oklo is just a utility, the stock might actually be expensive today, even if they succeed perfectly.
Because the multiple will compress.
Exactly. But if the market decides Oklo is pure tech infrastructure, if it gets valued like a data center REIT or a specialized chip fab, then the ceiling is incredibly high. The biggest gamble here isn't just whether the reactor works. It is how Wall Street ultimately decides to label the company once the lights finally turn on.
Are they selling power, or are they selling the future of compute? That is a fascinating distinction.
It's the literal difference between a 2x return and a 20x return.
Well, we will have to wait until at least 2027 to find out which label actually sticks. But until then, it is going to be a wild ride to watch. Thanks for joining the analysis today.
Thanks for having me.